Before moving on, I want to clarify one thing. You might have already know about this, but let me clarify one thing. Section 1, there are two sections, Section 165, Section 165A. So if I ask you a question in Section 165, on whom the compliance procedures will be there, like what we are going to discuss, the interest, return filing, penalty, etc. On whose behalf it will be there? The responsibility is on the service recipient of service. Section 165, when I say Section 165, advertisement services EL 6% EL cases. The responsibility to deduct the tax and remit to the central government and file the return is on the service recipient. And for Section 165A, 165A is related to the e-commerce operator. In this case, on whose behalf of the compliance procedures will be there, like whatever is there, like interest and the penalty, etc., that is on the provider of service. So if an e-commerce operator is providing the goods and services to the customers in India, customers need not deduct any tax. But the e-commerce operator who is doing a business in India, he has to remit the tax to the central government. That's what I want to clarify here. These both are placed differently in respect to with respect to the compliance processes. Okay. Now we will see section 166. So if you have not made the payment of equalization levy at the rate of 6% on time. So what is on time? Every month after the deduction, the whoever is responsible for deducting the payment, the service receiver, whoever is in India, okay, that service receiver has to deduct and pay it to the government on or before 7th of the following month. So levy deducted shall be deposited to central government 7th of the next month. This is the similar provision in the TDS also, right? 7th of the next month. Now, if he has not deposited on time, then there will be interest is applicable. Interest, if not deposited, interest at the rate 1% shall be applicable for the month or part of month. So 1% interest will be applicable if he has not made the payment on 7th of the next month. Then what is the interest is there? Then is there any penalties also applicable? Yes, the penalty provisions also applicable if the equalization levy was not deposited. In addition to the interest, there will be a penalty is also applicable. There will be a penalty which is equal to the amount of equalization levy that failed to deduct would also be levied. This is as per section 171. Section 171, but the maximum penalty they restricted it to amount of equalization levy which is in default to that restricted to that amount, and penalty would also be applicable here. Now I am moving on to the section 166A. Similar provisions they have inserted for the e-commerce operators also. But they have actually given a quarterly timelines for the payment. It is not a monthly payment, it's a quarterly payment for e-commerce operators. So EL referred in section 165 shall be paid by every e-commerce operator to the credit of the central government by quarter end, which is as follows. First quarter, that is April, May, June, ending 30th June. The timeline due date is 7th of next month, 7th of July. For September, 7th of October. But for December, 7th of January. And interestingly, for quarter ending 31st March, due date is 31st March only. So they have to actually, I think they should estimate, e-commerce operator has to estimate how much is in the March month transactions, he has to estimate how much is the levy that he's supposed to pay to the government. He has to make the payment before the 31st March only. This is a last quarter is an interesting one. Now, what are the timelines for the equalization levy? What are the timelines for making the payment? Equalization levy under section 165A, e-commerce operators related. That is covered under section 166A. For every quarter, 7th of the following month. Every quarter, 7th of following month, like June, then September, then December, then last March. For March, the time limit 31st March only. This is the simple provision. Now, if not deposited, then what are the consequences, sir? So consequences are same, interest and penalty. If it is not paid on time, then 1% or month or a part of month for the default period, interest is applicable at the rate of 1%. Same provision is applicable for the e-commerce operator also. In addition to this, and there will be a penalty will also be applicable. Okay, penalty will also be applicable, which is equal to the max to max, which is equal to the amount of equalization levy that was not deposited. Amount of equalization levy that was not deposited by the e-commerce operator, penalty will also be applicable. What is the summary? Every e-commerce operator has to make the payment quarterly. So if he has not made the payment quarterly, then interest will be applicable. What is the amount of interest? 1% of the 1% of month or part of month is applicable. In addition to the interest, there will be a penalty also applicable, but the maximum penalty is the amount of equalization levy which is in default. Okay, I hope you clear on this particular provisions. Now I'm moving on to the furnishing the statement. So if you see in the TDS provisions also, you need to file quarterly return, 26Q, 27Q, etc. Right? Similarly, for equalization levy also, whoever is the deductor has to furnish a return of income. The return of income, what is moving on. Section 167 to 169, I'll cover it in the later part when I'm talking about the return filing. Now I will directly jump on to the section 170 and 171, which is interest and penalty. We have already seen in section 166 and 166A, but I will just give you a summary here. There is one more important point about the penalty that I'm going to discuss. So first, section 170. Section 170 simply says that interest at the rate of 1% is applicable for the month or part of the month for which the EL was not deposited. This is applicable for both the sections, e-commerce operator as well as the advertisement service. Both these sections, this provision is applicable. Interest rate is how much? 1%. For which period? For which the equalization levy is in default. Okay. Even part of the month, even 2 days, 3 days delay also, we should consider it as a month only. Right. Now I'm moving on to section 171. Section 171 is a penalty one. Penalty one. We have already seen when we are discussing about the earlier provisions that penalty is also applicable. The maximum penalty that will be levied is the amount of equalization levy which is in default. Okay. The first point is that only. First point is simply says that penalty is also applicable in addition to the interest. The amount of maximum penalty is restricted to the amount of equalization levy which is in default. Now I am going to talk about this one, the third point. The third point, if you observe the words which were used here, in the first point, they have said failure to deduct whole or part of equalization levy. That means if you have not at all deducted, then the penalty is applicable there. But there is a additional penalty in the case of where we have deducted but not made the payment to the government. Then this is more riskier. So they can use it for, they will deduct the money and they can use it for regular operations work without paying it to the central government. This is more riskier. So that's why they have introduced an additional penalty on those deductors where they deducted the money and not paid to the central government. Failure to remit EL on or before 7th of the following month after deduction of the same. So when you see the word month here, this is applicable for whom? Section 165, because section 165A related to the e-commerce operator, which is covered under section 166A. Sections you need to remember well here. Okay, the interest with the whatever the timelines which are applicable for the e-commerce operator is quarterly, not monthly. So when I say month, if the law has used month, this is applicable for section 165 related equalization levy, which is related to advertisement services 6% levy, for which this penalty for them this penalty is applicable. Okay, am I clear? Now, in addition to the payment of levy and interest, penalty of INR 1000 per day of default, 1000 per day of default will also be levied. Such penalty shall not exceed the amount of levy which is in default. The same provision, but the maximum amount of penalty here also is restricted to the amount of levy which is in default. But he actually deducted the payment, but he is not paying it to the central government. Maybe he is using for other operations, for other priorities, and not paying it to central government. This is more riskier. That's the reason why they put this additional penalty on those. The penalty, what is the amount of penalty? 1000 per day of default. 1000 per day of default, they have to make it remittance to the central government. But the maximum amount of levy which is in default. Okay, this is applicable for the advertisement services related equalization levy, not applicable to the e-commerce related one. Am I clear? Now, I will move on to the return filing provisions. Section 167. Moving on to section 167 relating to the furnishing of statement. So you might have seen in withholding tax provision, that is TDS provisions also, we will file a quarterly return. The form names are 26Q, 27Q. Similarly, for equalization levy also, we need to file a return. But there it is quarterly, but here it is annually. Annually, you need to file a return by giving all the particulars of the levy deducted. So what is the timeline for the same? The timeline is 30th June of the following financial year. So for example, 21-22, the timeline to file the return of income is 30th June 22. 30th June of the following year, that is 30th June 22 is the return filing date. SSC to whom levy is applicable under section 165 or 165A. Both advertisement service as well as e-commerce operator needs to furnish return of income by 30th June of the following year. For example, if the SSE has not filed his return on time, then is there any option to file after the 30th June? The answer is yes. He can file the return of income after the expiry also, but within 2 years from the end of the financial year in which the particular transaction or provision of the services has took place. For example, if the transaction took place like receiving the advertisement services or taking the services of the e-commerce operator in 2021-22, then he can file the belated return. He can file the belated return within 2 years from the end of the financial year in which the transaction took place. That is from the end of the financial year 22-23, 23-24. That means belated return can be filed by 31st March 24. 31st March 24. He has to file the belated return which by 31st March 24 within 2 years. Said he can he be able to file the revised return if he sees any incorrect particulars in the return? Can he revise his return? The answer is again yes. Its same timeline is applicable for the belated return as well as the revised return. Same timeline is applicable, that is 2 years from the end of the financial year in which the transaction took place. Okay, am I clear? Now, for example, if sometimes AO sees that there is a payment happened, month over month payment was happened equalization levy, but return was not filed. In those cases, now what AO will do is AO will issue a notice that this is you have not filed your return. Please file your return. That if the SSC receives that notice, he has to furnish his return of income within 30 days. Within 30 days of the receipt of the notice, he has to file the return of income. Section 167. Section 167 is applicable for the section 165, that is advertisement service. Section 165, yeah, that is for the e-commerce operator also. What is the timeline? 30th June of the following financial year. If he finds any incorrect particulars, or he wants to file, then he wants to file a revised return, or he has forgot to file the return, he has not filed the return. What is the timeline to file the belated or revised return? 2 years from the end of the financial year in which that particular transaction took place. This is about section 167, furnishing of statement. And what is the form for filing the return? What is the form in which he has SSC needs to file the return? Is form number 1. Form number 1. So that was not mentioned in the material currently. So I will include this particular point. Form number 1, he has to file the return. Okay, so what is section 167? Section 167 is the furnishing of the statement. Every SSC for whom this section 165 or 165A is applicable, advertisement or an e-commerce operator, he has to file his return of income on or before 30th June of the following year. Okay, if he has not filed the return, he can file within 2 years from the end of the financial year in which the transaction took place. If he is actually filed a return but he found out some incorrect particulars, he can revise the return within 2 years from the end of the financial year in which the transaction took place. If the AO sends a notice, he has to file his return within 30 days of receipt of the notice. So this is about section 167. Now I'm moving on to the section 168. Section 168, just like the income tax return, once you file the income tax return under section 139 subsection 1, then the return will get processed and you will receive an intimation from the assessing officer, right? Similarly, when you file your return under form number 1, then your assessing officer will send you a notice. That this is the extra additional demand, or there is no demand, or there is a refund. In any case, he will issue an intimation to us. This is the processed statement to you. So what is the timeline for assessing officer to issue that intimation? So we'll see that where a statement has been filed under section 167 by the SSC, same will be processed under section 168. Any arithmetical error due to processing, same needs to be rectified. Post processing, once it get processed, if there is any demand or refund, either there is a demand or can be a refund or there is nothing. In any case, he has to give an intimation. Same needs to be intimated to the SSC within 1 year from the end of the financial year in which the original or revised return filed, as the case may be. I given an example here. We can see in detail how the timeline is applicable. 1 year from the end of the financial year in which the original or revised return. So original return is filed in, for example, in FY 21-22. then he has to give a intimation within 1 year. Within 1 year, that means 31st March 2023, he has to give the intimation. Right? In case of a revised return, from that revised return end of the financial year, 1 year from the end of the financial year, has to give the intimation. Okay. In case of any further demand, interest penalty is payable. Same needs to be served by the AO in form number 2. Form number 1 is filing of return. Form number 2 is intimation of the demand, interest or penalty. So whatever he identified here, any additional demand or refund in any case, he will issue in form number 2. Similar thing if you have identified, if you have seen any assessment order, on the last page there will be a demand notice will be there. The demand notice is under section 156. That is for the regular scrutiny assessment. Similarly, for equalization levy also, the assessing officer will issue a demand notice. The demand notice will be in the form number 2, intimating that this is the extra demand, this is the refund, or etc. Right? Okay. In summary, what is section 168? Section 168 is very simple. Section 168 is, only says that in case if the assessing officer needs to give the intimation about the additional demand or refund, if any, to the assessee within 1 year from the end of the financial year in which the return is filed. The return can be original return or revised return. The timeline will start with the respective, as the case may be. The timeline will start. Okay. If there is any additional interest or demand is payable, then he will issue the same under form number 2. That is what about section 168 is. Section 169. Section 169 is similar to Section 154 of the Income Tax Act. Section 169 says that, so it can be a possibility of any mistakes by the assessing officer. Okay. So, for example, assessing officer issued a demand notice under form number 2 in this case. But in that form number 2, SSC has identified that in this order, the information that he has produced and what they have agreed, that is not coming out, which is very apparent from the record. Then SSC can bring to the notice of the assessing officer saying that in this particular order, this particular information was not considered, due to that the demand has increased. Then assessing officer can verify the same, and he can actually issue a revised demand notice under form number 2. What is the timeline to issue the revised demand notice in those cases? Intimation can be amended within 1 year from the end of the financial year in which the original demand notice was issued, in which the same was issued. For example, in case the demand notice was issued in 2022-23, then the revised demand notice he can issue by 31st March 2024, 1 year from the end of the financial year in which the original demand notice was issued. Right? If such rectification, if such after doing that rectification, if there is any increase in the demand or reducing the refund, so in that cases, assessing officer has to give an opportunity of being here to the assessee. Okay, this is all about section 169. Now I'm moving on to the section 172. Section 170 and 171, which is related to the penalty and interest. We have already covered this. Okay, now I'm moving on to section 172. Section 172 is for the penalty for failure to furnish the statement. So, as you have already seen, the furnishing of statement. What is the timeline for the furnishing of statement? Is 30th June of the following year. For example, if the SSC has not filed the return on or before 30th June, then he has an opportunity to file the return within 2 years. Right, within 2 years from end of the financial year in which the transaction took place. We have covered this provision. Now, this 2 years, once he missed the timeline of 30th June, if he wants to file the return, will he be able to file the return for free of cost? Are there any non-compliance consequences? Yes, there are consequences. To bring that discipline that to file the return on or before 30th June, this provision was introduced. Section 172 says that if we have not filed the return on or before 30th June of the following year, then when SSC is filing the return, he has to pay 100 rupees per day of default. For example, 30th June 2022 he has to file the return, but he has filed the return on 31st July 2022. That means 31 days related or 30 days related penalty. 30 into 100 rupees, that is 3000 rupees he has to make the payment. Along with the return of return filing, he has to make a payment of around 3000. Okay, that's about section 172 is. If statement or return is not filed on or before 30th June of the following year or within 30 days of the service of the AO, AO can also issue a notice to file the return. In that time, in that cases, within 30 days he has to furnish the return of income. In that case also, if he has not furnished the return of income, then this penalty provisions will come into the picture. The penalty amount is penalty of 100 day for each day of default is leviable. Okay, that's about section 172. Moving on, section 173. When 173 says, 172 says penalty is leviable. 173 says that if there is sufficient cause on behalf of the SSE, that then there is no penalty is leviable. For example, there is a fire broke at a factory. There is a fire broke at a premises of the corporate office. In that case, SSE has lost all the records. He was not able to file the return on time. So in those extreme cases, then this provision says that if there is a sufficient cause that bring to the assessing officer, then assessing officer can actually remove this levying of penalty under section 172. And further, before imposing the penalty, assessing officer shall provide a reasonable opportunity of being heard. So before imposing any penalty, okay. Now we are moving on to the appellate provisions. So what are appellate provisions? So you file your EL return of income was filed, and same was reviewed by the assessing officer and or issued an order. In this order, there is an additional demand, additional tax that you need to pay. In this case, SSC has any right to question the assessing officer before the higher authorities? The answer is yes. So if the SSC has a point against the assessing officer, he can file an appeal. That appeal was covered under section 174. The first level of appeal is CIT appeals, Commissioner of Income Tax appeals. 174 says that aggrieved by the order of the assessing officer, SSC can file an appeal in form number 3. Remember these form numbers. Anything can be a question in the MCQs. Form number 1 for the return filing, equalization return filing. Form number 2, intimation can be issued by the assessing officer. Form number 3, appeal before the CIT appeals. Form number 3, along with INR 1000 rupees and fees you need to pay, minimum fees is 1000 rupees you need to pay because there are some logistic things and stationary things from the department side also. So for that, this 1000 rupees fees will be levied. To the CAT appeals within 30 days. Within 30 days of receipt of the order, after receiving the order of the assessing officer, from there the 30 days he can have the right to file an appeal before the CAT appeals. Okay, once you file the appeal before the CAT appeals, whatever provisions that are there in the Income Tax Act related from section 249 to section 251 related to the powers of the commissioner and how the appeal is get disposed, all those provisions are equally applicable to section 174 also. If our equalization levy related appeals also, same provisions are applicable. That's all about section 174. After hearing of the case, Commissioner Appeals has disposed of the order not favorable to you, favorable to the department. So he confirmed the whatever addition made by the assessing officer, he confirmed that demand. Then in that case, you still have any right to go for further appeal? The answer is yes. You can go to the ITAT in this case. ITAT, Income Tax Appellate Tribunal. You can go to ITAT appeal also. So by when you need to file this appeal? Within 60 days. Within 60 days from the receipt of the order. Within 60 days from the receipt of the order of the Commissioner of Appeals, you can file an appeal before the ITAT also. Which form he has to file? Form number 4. There are 4 forms came till now. Form number, again, 1000 rupees fees. Fees is same for Commissioner of Appeals as well as the ITAT also. Here, how do you remember the 60 days? You remember only one timeline, that is 30 days. 30 days to file the appeal before the Commissioner of Appeals into 2, 60 days. 60 days is the appellate time limit to file an appeal before the ITAT. Okay, form number 4, 1000 rupees fees, 60 days is the time period. He can file the appeal before the ITAT. For example, a CAT appeal issued an order in favor of the SSC. In favor of the SSC, he given an order. In that case, a department can file an appeal. Yes, the department can also go for an appeal before the ITAT. Okay. So not only the SSC, department can go. Anybody can file an appeal before the ITAT if they are agreed by their order. Now, moving on to section 176. Section 176 is punishment for false statement. Punishment for false statement. During these proceedings, before the assessing officer or Commissioner of Appeals or ITAT anywhere, if he makes a false statement, either by orally or by the given any statement which contains the incorrect information, then in those cases, if he intentionally did that, then in those cases, then there will be a penalty as well as there is a 3 years of imprisonment will also be there. There are 3 years of imprisonment and there is a penalty also. 3 years jail and with a fine for what? Any false statement or delivers an account or statement which is a false one. So, but in these cases, these are non-cognizable offences. That means without the approval of CCIT, these prosecution proceedings won't be initiated against the SSC. Okay. That's the one. Police authority directly cannot put him into the jail without the approval of CCAT, and there is a procedural thing. These are non-cognizable. There should be a arrest warrant in these cases. These are extreme cases. Okay, so that is what section 176 is. Now I am moving on to the section 40A clause IP. This is not as per the Finance Act. This is as per the Income Tax Act. Income Tax Act. So Income Tax Act 40A, 40. I think you might have heard about 40AIA by now. 40AIA. What is it? 40AIA. It is about the disallowance. If any expenses was paid without deduction of the TDS on the same, then the particular expenditure will be disallowed for the ticket. Then it will be allowed in the year in which that was the same was paid. Similarly, here also in these cases, any consideration paid or payable to a non-resident for specified service on which EL is deductible if the same is not deducted but not remitted before the filing of return under section 139(1), whatever is the return filing deadline is there. If he has not deducted or paid or not at all deducted, then in that case the expense amount will be disallowed in the hands of the assessee for that year, and the same will be allowed in the year in which the same was paid. This is exactly similar to the what is section A's section 40 subsection A clause IA of Income Tax Act. Same thing was here also for the equalization levy also. Okay, this provision is applicable for the EL only, equalization levy at the rate of 6% only. This is applicable not for the e-commerce operator, because e-commerce operators, he is not filing the return of income with the Indian government, right? In the case of e-commerce operator, who is a non-resident, he will file the return of income with his respective country. So this disallowance is illogical to apply to him, right? He won't file the return in India. He don't pay the corporate tax in India. Okay, this is applicable only for the section 165, which is related to the advertisement services, 6% equalization levy. Those cases only this section 40A IB is applicable. Am I clear? Okay. Exemption. Now the last point is exemption. What is this exemption? Simply I will say, for example, Google has provided you some advertisement services. Okay, you have deducted around 6% tax, and you have paid the remaining amount to them. So in Google's hands, this is already taxed in India. Based on the DTIA agreement, there should not be any double tax on the same income. So in those cases, Google can claim an exemption for the tax which it has paid in India, what already paid in India. Then for that he can claim an exemption in their return of income when they are filing the tax filing with the US in the USA. Okay. And any income arising from providing specific service under section 165 or 165 is exempted in the hands of the service provider. For example, if Google provides service, then income earned shall be exempted in the hands of the Google, provided if the payer or service payer deducted the levy on the same in India. If the levy was deducted, that is at the rate of 6% and paid by the Indian in India, for those income, Google can claim an exemption in their return of income. This is what about section 10 subsection 50 is about. Now we have completed this chapter. Now we will see one question on this procedural aspects like interest, penalty, and appellate provisions. There is a question came in the examination. We will go and see that. Question number 7. Question number 7. This was asked in the examination CA Final May 2022. Very recent one, for 6 marks. It was asked. Very simple question, basic question, but they want to test the procedural aspects also. That's why they ask this question. Sun Limited, an Indian company, engaged in the business of manufacture of sale of carpets. To expand its international sales, it hired services of a London-based company, that means non-resident, Shine Inc. for online advertisement. Online advertisement, if we see, then which section is applicable? Section 165, 6% equalization levy. Shine Inc. has no PE in India. They further confirming that Shine Inc. is a non-resident. During the previous year 21-22, Sun Limited paid 5 lakhs for the Shine Inc. for such services. Services means online advertisement here, and deducted equalization levy on 15th March 2022 and credited to the central government on 15th April 2022. This is important point. So they deducted in the month of March. So if the March month it was deducted, what is the due date for making the payment? Next month, 7th, right? We just discussed it in the provisions. What is the due date for 7th of the following month? So in this case, when they need to make the payment to the government, 7th April 2022. On or before 7th April 2022, they have to make the equalization levy payment. So, but they have paid on 15th April 2022. There is a delay here. Compute the interest leviable to Sun Limited on the delayed payment of equalization levy. So you need to count the number of days, and interest also you need to calculate. What is the interest rate here? 1% per month or the part of the month for which the default continues, right? First point, compute the interest leviable. First of all, equalization levy. They paid the total amount of 5 lakhs. 5 lakhs into 6% is 30,000. The equalization levy deducted on 15th March 2022 and supposed to be deposited to the government on 7th April 2022, but the same was remitted only on 15th April 2022. In this case, there is a delay of 8 days counted from the 8th, 9th, 10th, 11th, 12th, 13th, 14th, 15th. Total 8 days. On the 8th day, they made the payment. So 8 days interest at the rate of 1% is leviable. That means on 30,000, which is the equalization levy amount, on that 1%, that is 300 rupees additional interest they need to pay. This is point number one, question number one. Then question number two, what are the circumstances in which penalty cannot be levied? We just have seen if the SSE has shown a reasonable cause. For example, there is a fire broke at their corporate office. Records were fired. So in those cases, they need an additional time and they are not able to comply with these provisions. In those extreme cases, assessing officer don't levy any penalty in those cases. So that's the sufficient cause. That is question number two. Question number three. Sun Limited agreed with the order of the imposing penalty. What is the time limit for filing appeal against the order of the AO? So we discussed about the separate provisions also. If assessing officer issues an order, then SSC has a right to file an appeal before the CAT appeals, right? CAT appeals. If not agreed with the CAT appeals order, they can file an appeal before the ITAT. In these cases, assessing officer has issued a notice. Assessing officer issued notice. What is the first appellate authority? CAT appeals. What is the timeline to file the appeal? 30 days. Which form number they need to use? Form number 3. That's what the answer is. Appeal to CAT. Agreed with the order of the assessing officer, SSC can file appeal in form number 3 along with a fees of 1000 rupees under this section to CAT appeals within 30 days from the date of receipt of order. Very basic information. They just tested whether student knows these provisions or not. This is very recent question, May 2022. So every point, everything is important in this chapter because chapter is only 4 to 4.5 pages. I hope you enjoyed this lecture, and I will show you one more interesting thing here. Okay, just give me a minute. Yeah. So if you ask me what is the one of the challenges faced by the student is covering this entire portion, especially the direct assets. There is a volume is too high and he won't able to cover on the day before the exam, and he won't able to cover in the last third revision, that is in the April month for May attempt and for the October month for November attempt, right? So that last revision gives you the confidence. What if a student not able to cover that on the day before the exam? If he took the tension of not studying the entire subject, then he will be in a trouble. For that, I created a short summary of equalization levy. It is just in one page only. I cover the entire equalization levy chapter in short notes without missing any provision, any point. So on the day before the exam, once you complete your 2 revisions, you can just come here and just use this one pager and able to try to remember all the provisions whatever is there in the material. So for every chapter you are going to get 3 things. One is the study material, the material what I have discussed just now, that material you will get, and the question bank, question and answers you will get, and the third one is 1.5 days for a quick revision summary notes also you will get. These 3 things you will get for every chapter. I hope you enjoyed this lecture. Thank you.